Hello guys, welcome to another episode of Chart Mojo. In this video, we will figure out four popular methods which are used to place a stop loss after you enter a trade. Okay, so here you can see number one is fixed percentage stop loss. Here you will place every time you trade, you try to place, let's say you have make a rule 5% SL for every trade. What you do, uh, if you trade any 500 rupees counter, okay, just for an example, you will place 5%, which means 25 rupees as an SL. If you trade, let's say, a counter which is running at 1000 rupees, there the 5% fixed stop loss will become 50 rupees SL. Okay, so this is the one which is mostly used in the fixed percent case. Now let us go to the second price action one. Now price action based stop loss. So guys, basically in price action based stop loss, we don't keep a fixed percentage kind of a thing. Let's say in our earlier example, what we have calculated is we need to uh, put the stop loss approx 20,000 rupees worth approx 20,000 rupees in price action way method. Okay, here we try to identify the pattern based stop loss, or is there any moving average, is there any trend line, or is there any previous swing low, okay, to place an SL swing low or swing high according to your long or short position. Now let us see volatility based stop loss. In volatility based stop loss, we basically try to see the average volatility in the stock, and if the stock is more volatile, then you need to put more points as an SL. The stock is less volatile, usually we try to see ATR. Okay, I will show you example as well in this case. And we will see by using ATR you can also place your stop loss. And the last one is time wise stop loss, which means you are expecting a good move. You have taken an option, you have bought a long option, and you waited for 1 week. There was no move in that, okay, or any positional counter, and you find opportunity elsewhere. So, as a rule, you have made that you will exit after 5 days or 10 days if there is no move in that, okay. So, these are the four type of stop loss which are widely used in the market. And now let us look at our example. I have selected two stocks. So let us go and see. So let us look on all the four of the methods. Uh, Here on SBI, let us first mark the resistance. We can see just before the breakout level. Let us say here 625 is the price, and according to the fixed percentage method, what you will do, let's say I make a rule 5% every trade as a SL. So 5% of 625 uh, would be near about 31 rupees. So it will come approx 590. Okay, so your SL will most likely be here at this level. Okay, near about this level. This is based on your fixed percentage method. Now, second, if there is a breakout and you want to place a SL order as per the price action way, here in this case, most of us we try to place the stop loss near the previous swing low level. So, in this case, if we let us assume there is a breakout from here, then we will choose this swing low as an SL. Why? There is a rising resistance line here, okay, and that swing low will protect our loss. Here, the percentage will go even less. You will take less risk as per this method. Now, if we use volatility based method in this, okay, what one tries to do, one try to understand the volatility of the counter. Normally, ATR is widely used to understand the volatility in the counter. So let us go and let us type ATR here. We get average true range. Now we can see the stock volatility is near about 10 rupees when it is squeezing, okay, and it can go till 15 rupees, okay. So what we do, we mark, let's say if you want to take 1 times of ATR, generally you can take 1.5 times of ATR as an SL, 1.5 or 2 times, but here again the amount will come near about 15 rupees from the price. So ATR based SL will become, let me change the color, let me put it yellow here. your ATR based SL will come near about, let us say if 1.5 or 2, you take 600 level as well. So here is the level of ATR based SL. So let me write the, here is your fixed percentage based. This yellow one is your volatility based. This black one I have written first was the PA, price action based. Okay. Now last one is time based SL. Let us say you have bought here the counter is giving a breakout, and then the counter is moving sideways for the next 1 week. As a rule, what you have written, that if the counter is going sideways for a 1 week, you will get out of that count. Now these 4 rules are not that one of the rule are superior than other, but one can combine 2 rules, such that one can combine fixed percentage method with the price action based method. Instead of using fixed percentage method, one can use max percentage of SL one can keep on an counter, and use that with the price action based method, which we generally do. But now this is totally subjective. It depends upon your style. One can't argue that A is best or B is best. This all type of SL will work differently in different market regime. In next video, I will try to make how different market regime affect your SL, affect your entry and target. Okay. Now let us quickly go and see another example, so that the concept is clear. Let us go and let us see in abort. Now again, disclaimer, I am just discussing this. If you see the abort chart, what you will see, you see a rising wedge pattern being formed, and just above rising wedge, okay, there is here a overhead resistance the counter is making. Okay, this is the overhead resistance. Now in this case, there can be an upside rising wedge breakout or an downside breakdown. For breakdown, what we usually do in such a scenario where the strong counter is showing good strength, uh, we wait for this swing also to get clear out. This is the swing low near about 20,000 rupees. We'll wait for it to get clear out, then we can play for the wedge target, which will come approx the distance here. Okay, the first one. In this case, let us say there is a breakdown instead of breakout. What you do, the price should fall here. Okay, it will go below 2000. Here you will generate a position. If you are using fixed percentage, as an example, we are keeping 5% for our fixed stop loss based. Okay, so near about 20,000 we will short. The fixed SL for the 20,000 will nearly come about 1,000 rupees. So if you take a short position, you will keep a 1,000 rupees SL, which comes to 21,000. Okay, which is near just about this breakout level. Okay, this one. Now this is your fixed percentage base. Now again, if you want to do with a price action way, here the SL will be quite less. If there is a breakdown here, as per the price action way, we will keep SL just above this rising support line of the wedge. We'll keep SL near about 20,300. Okay, here the risk will be quite less if we take a SL just above the rising support. Now you will argue, sir, then this is the best method. But see, sometime what happen, as we can see, the ATR of this counter is 400. Just after giving a breakdown, if there is sudden good news in the market, it might general market, it might try to just go up again. It might hit our SL, it might go down again. Okay, so if it's a serious breakdown, then it should not give such type of behavior. But there can be a chance that it will hit our SL and then it will go down. So that's why there is no argument that A method, B method or C method is very good. It depend on the market regime. A different type of market regime. Now Here the SL will come near about this level for the PA based. Now let us say want to take a trade on the volatility side. Here the 400, we can see the average movement was 400, near about 500 is the trend. 500 to 600 is the normal range. You want to take 1 times of ATR, so your SL will come near about 20,600. If you take 1.5 time ATR, it will come about 20,900, near about the previous resistance. And the last one, time based, if the counter is giving a breakdown but it is not moving for a week, and you can think of switching a position or using that for another opportunity. Okay, now again in time based stop loss, the fixed percentage, max percentage stop loss is there for to protect you. Okay, time based doesn't mean that uh, you wait for a 1 week even if it's going against. Okay, now combining these methods will definitely produce a good result. So ideally we use max percentage which we can give to a counter plus price action based. It is worked for us. It can work for, you know, different combination can work for different kind of traders. So it is totally dependent upon you. So guys, I think this episode might have helped you to understand more about the stop loss. If you have liked our video, please do subscribe and share with your friend. We will be bringing such content every week. So yeah, let us meet on next week. Till then, take care. Bye, guys.